Welcome to the NewsAge Energy presentation in the AGORACOM online Gold and Commodities Conference. My name is John Carlesso. I am president of NewsAge. I'll be presenting our company to you today, as well as answering questions posted by investors who are watching the presentation at a scheduled time. If you're watching outside of the scheduled time, please post your questions and we will respond to those as well. Before I begin, I would ask that you all take the next 10 seconds to review the disclaimer slide, which you can review at any time by coming back to this at slide 2. NewsAge is a company that's been recently restructured. We're focusing on opportunities in the U.S. Gulf states that we're tremendously excited about. I'll tell you a bit about that in a moment. We're listed on the TSX Venture exchange under the symbol NSG, and you see some share structure information and as well. Our growth strategy is really focused on the U.S. Gulf states of Louisiana, Texas, and to a certain extent Mississippi. We are focusing on a strategy that involves partnering with established local operators who have experience and know these areas. And we're looking to develop something similar to a talisman model here, where we're going in to opportunities that are lower risk, that will generate cash flow quickly, but yet still generate returns that are exceptional. And our objective here is to build a base of production and cash flow upon which to build a foundation to lead to further opportunities where we can take on greater risk and maybe swing for the fences a little more. So now we're really focused on a talisman model, building the cash flow and building off of that down the road. Graphically, you'll see what this looks like in terms of how that strategy is built out, and I'll talk about the detail what we're doing specifically in terms of the projects here as well. Why the U.S. Gulf states? It's an interesting area, one that I think is probably undercovered in Canada, but it's certainly very well known throughout the U.S. It has a very extensive production history. There is a ton of data available here. They've been drilling oil and gas in these areas for many, many years. The infrastructure developed is in place, and in the projects that we're looking at, in some cases 50, 100 feet away. So if you are successful, you can tie in to production extremely quickly. It's a low operating cost area, and as I mentioned earlier, it's an area where local expertise is quite important. On this next slide, you can see the productive basins in North America, and you can really see this trending all the way from the Gulf of Mexico through places like Texas, Colorado, and all the way up to Alberta. So some people wouldn't necessarily connect Alberta or Western Canada to the Gulf Coast area, but you can see through this slide that, in fact, this is very much on a similar trend. Within the Gulf itself, there's a tremendous amount of activity offshore. You talk to people who have taken cruises in the area, leaving from New Orleans, for example. They'll tell you it's kind of like going through at night a little neighborhood. It's so well lit up from all the rigs. So there is a lot of activity here, both onshore and offshore in the Gulf region. NewsAge is really focused on some very specific opportunities, what's known as bypass pay zones, where you may have had a well-developed but certain productive zones were not tied in. There's opportunities to go back into those identified areas and capture that production. Development wells are in existing fields where there is known production, however, where there is still room to drill new wells. And recompletions, again, are old productive zones that can be regenerated and reworked to extract that production that exists. And again, as I mentioned, this type of opportunity really reduces your risk. From a pure exploration opportunity, you probably look at an average of between 1 and 3 in 10 holes drilled. With this type of project, you're generally looking at 1 in 3 holes drilled as a success rate on average. We're aiming for a little higher than that based on the project profile. Our first project was Lafourche Crossing. We announced that about a month or so ago. Our strategy here in terms of dealing with our partners in the Gulf area was to almost treat them as pilot projects initially. And, they looked very promising, but we didn't want to take a big risk, so we took a very small position in the Lafourche development well. This has turned out quite well. We have a 5% interest to it, which, again, is small, but, again, understand our objective was to really test our theories. And, we're building a relationship with the new partners. We're getting a sense of how they operate and how conservative or risk-averse they are. This has been identified to have 9 productive zones